Today in SERDNA Talks, we're going to talk about money. Let's talk about real estate. Let's talk about the economy. And let's talk about the stock market. And according to CNBC, March 2020 was a crazy month for the stock market. It was the fastest 30% sell-off ever. And 30% is a huge number. The source of higher inequality is the Federal Reserve and its policies, of course, which push stock prices and home prices higher. Home ownership hasn't moved in step with that stock advance, and many individuals didn't participate in the stock market rally after this Black Swan event. Also, during 2020, we saw how easy it was to lose a job. Companies started firing their employees left and right. It was and still is really difficult to have a steady income and a steady job. And then in the middle of 2020, as per CNBC, the stock market reached new levels. It was crazy, just like a roller coaster. It was up and down all the time. And if you think that 2020 was insane, just wait. This 2021 will be crazier than ever. We already started this year with horrible news. Nobody ever thought that the capital was ever going to be rated the way it was. And with that precedent, I'm pretty sure that something worse will happen in the next week. I hope I'm wrong. This world depends on two things. Number one, spending money. And number two, spending more and more money. Or maybe not. It really depends on debt and creating more of it. But with so many unemployed people and with so many businesses going out of business, who knows how this story is going to end. Just keep in mind that nearly 100,000 businesses had to close temporarily because of this Black Swan event. And now those businesses are closed forever. And destroying more than 100,000 businesses basically means that millions and millions and millions of people are now unemployed. Millions of families have been destroyed financially. They can't pay for their rent. They can't pay for their mortgages. They can't pay for their food, etc. And because of this Black Swan event, the world is changing rapidly. This has been the biggest transfer of wealth in human history. And stock prices and home prices have increased, but home ownership has shrunk to fewer hands. And as a result, we now have more inequality than ever before. Let's talk about real estate. If you're a renter, consider buying your property because you are already paying a mortgage. Even if you don't want to think that way, you are. So get your credit score up, take care of your finances, and talk to a mortgage broker. Just don't wait for interest rates to go up because if they do and when they do, your purchase power will drop drastically. If you think that property prices are high here in Southeast Florida, you're right, but keep in mind that we're talking about Florida. This is the best place on earth to live, and that's why the entire world wants to live here. If you want to buy a property, and if you think that property prices are high in Southeast Florida, just think about appreciation. Your property here will increase in value, and that's what you need to think about. The economy is basically consumer confidence, employment, unemployment, etc. And stocks, they go up as high as they can because those prices depends on how much money is people willing and able to pay for it. It has nothing to do with who is the CEO, how much money is the company making, etc. It's all about supply and demand, just like in real estate. And if there is a lot of money in circulation, then people will be able to invest it. And when companies are making money, they are helping the economy grow. They will probably invest in personnel, they will probably invest in equipment, etc. And if that company is growing, and if they are making tons and tons of money, then people will feel confident and invest in it. And when that happens, you will see stock prices go up, just like what you probably see in Tesla or Amazon or anything like that. If you have questions, remember to subscribe to SERDNA Talks and to share all my videos with your friends and family. I have to go. See you soon. Ciao.